This is our Forex blog for June 5th, 2014. These are our currency indexes, which let you see visually what each individual currency is doing. You can, for instance, see that the Eurodollar is trending down, it's underneath its hourly moving average. And so when you have a currency that's weak like that, the daily trend's down, the weekly trend unfortunately is up, the monthly trend's down. Most intraday traders want to trade in the direction of the actual real-time trend. It always helps when the longer term trend confirms it. But oftentimes it's the case, like you see here, daily trends down, the weekly trends up, and the monthly trends down. So that can happen. And when you have a trend that's down, you can wait for a multi-hour sideways rectangle breakout to the downside, or what I prefer is a pullback, up. So you might, look for these, 1, 2, 3, 4 trades, and you want to sell the euro against whatever currency's strongest. You can see the dollar's trending down, the yen is above its hourly moving average. So and also keep in mind these containment bands, especially the white one, price tends to reverse at this level. So as you can see what happened here with the dollar. So if it's underneath this level, you might have a violent explosion back up, which is what happened in the euro. You can see it went down one more time and then exploded up for about an hour and a half. So be aware that when they break these containment bands, it might make one or two more tiny waves down, but it usually will violently reverse. So again, the euro is weak, the yen is strong. If you focus on that before the news today, you want to look to sell this, and you can see that's exactly what was the most profitable method. Again, when the euro had little pullbacks, you want to sell it. Small win right here. That would be your risk. You can see you pretty much broke even on that trade. Huge win potentially on that last trade. And usually when you make a big move, it's going to go at least one more wave down. You got to be very careful trading, around news times. Draw your fibs on there, and don't get greedy if it goes below the 1.382 fib target. It's a decent place to get out. And you can make a fortune just trading a few times a month when news comes out, because when you get these pullbacks, you can go short around here with your stop rate above here. This is your risk, and you can see your win, is 5 to 8 times more than that. So you could be trading during news times and be wrong, 70% of the time, and still make money because of the huge wins. And another thing you can do during news times is use our 5R range charts. These allow you to, really find high probability, low risk trades. You can see this market sold off. You have a nice little pullback right here. You can go short with this as your risk, and then you can see you made 10, 20, 30, 40 pips while risking less than 10. Anytime news breaks underneath the low and comes back up, you could go long right here, but this is your risk. Ride it all the way up. I wouldn't necessarily go short because a lot of times it pulls back a little bit and explodes up. This one pulls back here, right back to the low. It's a little bit higher probability than selling the high, but I'd be a little careful on that. When it comes back up, you can see it couldn't get back up to the high. This is a pretty high probability trade. It's likely to bust through the low, which it does. And this is the type of trade where you can risk a very tiny amount compared to what you will make. But I want to focus more on how to use our currency indexes. For those who don't want to have to learn how to trade, you could just use our Forex trading signals. You can see they did pretty good in the dollar Swiss today. Sold here and went up, bought here, went up, sold here, went down. Small win, huge win, huge win, huge win. And we're using fibs, fib targets, Gann angles. There's over 250 different patterns in here, along with trend lines from this swing high to this swing high. Notice price came up to it, and we actually know where the trend line is. Now this isn't most human traders wouldn't draw like this, because the swing high it kind of worked its way up, and this would be where a human trader picks it. But whenever you have a violently huge downtrend like this, Gann angles and fib areas, and also computer generated trend lines work exceptionally well. Just to showcase some of the other signals. Here's the pound, sold here, small win, break even, win, loss, 25 pip win, nice win, 10 pip win, 5 pip win, loss, and then we're short right now. Whether you use our trading signals or you actually use our currency indexes and currency meter. Again, here's one where all the time frames are up. The Australian went up, pulled back a little bit, it's going sideways. The daily, weekly, monthly trend for the most part are up. And so when this explodes up, it's going in the direction of the trend. And you can clearly see almost no weakness on this. It doesn't get any better as far as probability-wise goes. And we know that the euro was weak, so at 6:30 you could look for sells in the euro Australian. This is probably some of the highest probability type of trading you can do. Whoops. Here we go, 6:30, remember. The euro was weak, the Australian was strong. Here's 6:30. Kind of breaks down from a trend line right here with a double top. Nice little wedge pattern. Perfect wedge patterns, kind of go into a point where price kind of goes up and down. It gets more or less and less volatile and then breaks out. Those are super high probability. This isn't quite as good as that. In fact, maybe you might have gotten tricked into going long, which is okay because your stop's right here. Usually these trades go a decent amount and certainly will break out over the high. The fact that it didn't, you could have got out of this trade with pretty much a break even if you had waited for the likely trend direction, which was clearly down. Weak euro, strong Australian. You can see that, again, the win-loss ratio is just astronomical. You're never going to catch every pip, but you had the potential of 50, 100, 150 pips while risking 15. So even if you got a third of that and made 50 pips while risking 10 or 15, that is what trading's all about. Dumb traders worry about their winning percentage. Smart traders worry about having huge wins and tiny losses, because it's so easy to get back, even if you have a string of 3 and 4 losses in a row. 5 pips here, break even, 4 pips, 10 pips, 15 pips. 130 pip win can get back 4 losses, especially once you start moving your trade, your stops to break even quickly. You can oftentimes get out of trades that don't work for very little loss. Here's one right here. Here was initial risk. Here's what you exited with. So while your initial risk was this, you only lost this. And a lot of times your wins, especially on trend days like this, you might anticipate a win like this where it might be 2.5 times your risk, but you actually have 5 to 8 times bigger profits on days like this than your risk. So we're trying to make trading easier. We did live classes for almost 6 years. We had thousands of people that paid for our classes, and I did them every single day, even though it cost me a lot of money personally to not trade, or oftentimes quitting early for the day to do class rather than trading when the market was active like today. People always complain that our systems were too complicated. Well, trust me, the methods that I have programmed into here, the 250 different trade patterns, oftentimes have 8 to 35 different rules for each of the 250 plus patterns. A swing low has to go above the previous hour's high. It has to go above the hourly statistical high. It has to go up for, let's say, 2 hours and pull back for 15 to 30 minutes. I mean, there's all kinds of rules as far as price, support resistance areas. There's about 40 support resistance areas in there, previous days, weeks and months, high and low. Daily, pivot levels, weekly and monthly. That's 27 support resistance areas right there. Key daily moving averages, hourly and 15-minute moving averages. We use VWAP, which is shows you what most traders have their position. It's a wonderful tool. It's called Balance Point Line. It shows you what the average price is for the day, and it's a phenomenal place for support resistance. If price is going down and can't get above it, you go short right here, short right here. You might have, we're already in a long, but if we weren't in a long and you went short, you have a small loss, you can flip and go long, you get your loss back. You know, and when these things get broken, oftentimes it comes right back up to it's a great place to go short, which might have been what this pattern was, which you can see generated 10, 20, 30, 40, 50 pips or so. It's absolutely phenomenal. And that's just one of, you know, probably 15 different tools that we have that no one else is offering in their software that will help make trading easier.